Hey, what's going on, guys? I feel like the music.
Yeah.
I'm glad. I'm glad. Get you in a good mood right to start. Ryan Garrison, Sound REIA here. I'm joined by Amanda Holbrook today. Amanda is a self-directed ninja. She works with specialized trust company. I met her actually at an event in, I guess, was it in Kentucky, Ohio, or where was it at? Was that a John Martinez thing, I think?
It was in
Very
Cincy.
Okay, okay. Yeah. And I got the pleasure of meeting Amanda, seeing her presentation. And I had some questions regarding my own setup with my self-directed situation, and she is a wealth of knowledge, and I enjoyed talking to you, and you're a good person and fun to talk to. So I was like,
Awesome.
well, I think that people in my group will get a ton of value out of seeing a little bit more about what you have to offer and what your company has to offer. So why don't you maybe go ahead? I'll kick over. Do you want to maybe introduce yourself real quick and
Yeah, absolutely.
better than I can?
No, you're good. No, I appreciate you putting this together. And I mean, what we're covering today, guys, we're going to make it fun and applicable to your business. So yes, Amanda Holbrook, Specialized Trust Company is our company. We do all things self-directed IRAs and 401ks, but mainly we work with real estate investors. So that's where the ninja part comes in, is bridging that gap instead of standing on the soapbox of here's, the IRS's way of explaining it. We actually make it like raw and applicable of how you can make an impact, for your financial situation today. I mean, it may even fund your next deal. So been doing this a long time. I'll touch on all that stuff, but you want to just kick it
Awesome.
off?
Yeah, absolutely. Let me kick it over for you.
All right, cool. All right, so let's get rolling and the fun stuff. So your money, your future, your way. What other way would you have it, right? So Ryan, the legal, they make me do this. Specialized trust company is a passive custodian. We don't recommend or endorse any specific investor. As a sponsor, we're not attorneys, not CPAs, no for tax advice or legal advice, as we're a passive custodian. It's for infotainment purposes only. All right, now let's get to the fun stuff. So yes, you know who I am. I am a certified self-directed IRA professional, which actually goes to SDIP, which isn't very attractive. But I've been doing this a long time, gang, in the industry for 14 plus years with all things self-directed, as well as, drinking our own Kool-Aid. So just how Ryan and I met, we do a lot of events and networking and build from relationships, because you don't know what you don't know. And the more you know, the more you grow. Can you also tell I'm a mom? The Dr. Seuss of the financial world. So let's get into it for you, because I like to highlight ourselves as more, and as entrepreneurs, we're all problem solvers, right? So you've got to identify the problems and the opportunities in order to grow, right? So it's the three forces that are working against all of us are the same. And those are uncertainty, unpredictability, expensive loads and commissions, and taxes. Dun, 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 dun. Right? So we're going to touch on these real quick, because a lot of these are Captain Obvious. When I'm talking about uncertainty and unpredictability, I'm talking about the stock market, right? Because what goes up, Ryan, must come down. Yes. And what control do you really have over the stock market? Especially over the past year or so, it's been very turbulent. And, I talk to clients on a daily basis where they have a traditional advisor that's not, a fee-based advisor, where you have to pick off their menu. And they're just telling you things like weather the storm, as if there's no other alternative. And there totally is. And we'll touch on that today. The next one is fees. Okay. You got to know what you pay for all of your vehicles, costs, marketing. I mean, it's all a balance sheet, guys. I always love, Ryan, like when someone's brand new to self-direction, the first question they always ask me, because they're not sure what to ask, is, well, what are your fees? And I always laugh, because it's like, well, what do you pay for your accounts now? And what do you think I hear back?
I don't know.
Crickets. That's exactly it. I was like waiting for the awkward silence. Mm-hmm. Sorry, I didn't mean to put you on the spot.
Oh,
But
sorry. I
that's
didn't know if it was
the
rhetorical.
point. No one knows, you guys. No one knows what they really pay for their accounts. I'm just going to tell you, if you are looking at your screen, it's a lot. It's almost, for $100,000 account, it's almost 7%, which is a lot. And that is not disclaimed right up front. So that's where, you have to know who's getting paid. Like, I love mutual funds. You have mutual funds, you have mutual hands in your cookie jar, and none of them are working for free, right? So self-direction is a fraction of what you normally pay. How do we feel about taxes? I have a hard time frowning, but they're just everywhere, right? And it's not about what you make, it's what you keep. So how the heck do we avoid all of these taxes that are listed here? Because if you're making, and this is all trivial to your own situation, but everybody always, if you make six figures, how much of that are you keeping? If you have $1 million in your account and it's all tax deferred, how much of that are you actually keeping? Because this guy is your silent partner in all your deals. No matter what deal analyzer you're using, you are paying this man. And if you're in the taxable world only, you're paying him a good chunk, and that sucks. So here today, we're going to make a plan, because if you fail to plan, you plan to fail. Right? And that is not what we're here to do. So that's the reason why you're tuning in. No matter where you're at, you're already taking that first step. It's just self-educating yourself, figuring out the better way, and knowing what's out there. So let's get down to the meat and potatoes of it. And yes, we're going to talk self-directed IRAs, but not just IRAs. We're going to talk IRAs, 401ks, SEPs, Simples, Roths, HSAs, CISA accounts. These are all types of accounts that you are able to self-direct. And some of you may be listening to that term and saying, well, what does self-direct really mean? So I want to make sure we're all starting like from the same starting line here, guys. So self-direction is not, hey, I logged into my account and my advisor says, well, buddy, you get to pick your stocks, bonds, mutual funds yourself. That is not self-direction. I see this all the time. Well, it says it on my screen, Amanda. Take them a purchase contract and see what they'll do. They're not going to hold that in your account. So it is not pick your stocks, bonds, mutual funds yourself. It is invest in what you know. So real estate, private placements, notes, tax liens, private entities, livestock, timber. The list goes on. Precious metals, crypto, anything you can hold within a self-directed account. And we all come from different walks of life. Real estate, guys, it just happens to be one of the 3 basic needs of every human on the planet. So it's the easiest one to apply to. And most of us are doing real estate in some way, shape, or form. So we're going to talk a lot about that. All right. So before we get into the fun deal structure stuff and all the juicy, I want to make sure that the word on your screen, everyone knows. So the word on your screen, if you're not looking, is Roth. ROTH, Roth. And I want you to remember, whenever you hear that word, think tax free. And you got to say it out loud and cheesy, just like I did, tax free, because you will be smiling. Yes, you will be smiling. Why will we be smiling? Because you're never going to pay taxes again. Who wants to pay taxes their whole life? Would you rather be taxed forever, or tax free forever, right? So if you pay the tax on the seed and not the crop, your account will grow tax-free forever. Okay? So just remember that. This has only been around, guys, the Roth component of the 401k we're going to talk about, since 06. The Roth IRA, 97. So these vehicles are not that old when it comes to like what's on the menu for retirement, right? Now, Ryan, you tell me, as far as like in your group, are majority of the folks solopreneurs, or they have a quote unquote side hustle LLC that they're operating in?
We have a mix of agent solopreneurs and people in W-2 still that are still working their normal job. Probably some people that have like old 401ks as well. So that kind of thing. We have definitely a mix.
Okay, good deal. So, and that's very typical because everybody's on a different chapter, right? So even if you are in W-2 world, and let's say you're an agent as well, typically they will have, and if you don't, again, I'm not an attorney, but typically any of that side hustle or that side income you have coming in through an entity, right?
Mm-hmm.
Tax professionals will tell you the same thing. There are reasons for that. So what I'm talking about here is the 401k for the entrepreneur, right? Just because you're in big corporations, they don't get to hog all the glory and have the 401k. Us entrepreneurs get to have it too. So if you have an entity, even LLC, S Corp, Sole Prop, C Corp, with no W-2 employees other than possibly yourself or your spouse or partner, this is for you. And this is the triple threat. Here I go with my ninja stuff again. Triple threat of retirement accounts. Okay. So you have your company. You are your company. You are all things in your company. But for a 401k, you're both the employer and the employee, right?
Mm-hmm.
So as the employer, do you want more write-offs or more write-offs? All of the write-offs, right? It's not about what you make. It's what you keep, right? So you can put this year up to 25% of your net up to 43.5. And so that's the net of what the company does. All right. So you net 100K, you pop 25K in here, you're only reporting 75 to Uncle Sam. So you paid yourself first. You see how that works? Now, for those of you, and I've got a goodie, I got a bonus for everybody in the group coming up here. But if you have old 401ks, 403bs, TSPs, you can roll them in to this side of the plan. No taxable events happening, right? You could just roll it into your own 401k. But I know you're thinking, well, Amanda, you just pounded this whole Roth tax-free into our heads. So now you're talking tax deferred. I like to have my cake and eat it too. Who doesn't like to have their cake and eat it too? Everybody does, right? So in this plan, you have the Roth component or the employee side, which means you can put 22.5. So you paid yourself 22.5. You can literally put all 22.5 into that bucket and it will grow tax-free forever. If you're over 50, you get a raise. You can do 30K. So that's 66 to 73.5 total that you're able to put away a year. And those are just contributions. And there's no income limits to this Roth piece either. Just so you guys know, I always have one in every group. My CPA tells me I make too much money to do a Roth. Well, that went out the window in 2010. And Roth 401ks doesn't matter how much you make because it's a company plan. All right. But here's the triple threat of it all, guys. This ties into your strategy. That gold box, now it's time to do your screenshot. You have larger contribution limits. You have tax diversification in one plan. You can borrow against a 401k plan. It's a restriction-free loan, right? So, Department of Labor rule, you can literally roll your old 401k over, turn around the same day and borrow 50% up to 50K and utilize that for whatever you wish. Now, I'm more of like a Robert Kiyosaki mindset versus Ramsey, if you know what I mean by that. I want you to take those funds and go get it into an income producing asset of some sort. But how does that loan work? You pay yourself back with interest over a 5-year period. So the interest doesn't go to anybody. This is just like you guys have heard of arbitraging HELOCs and BLOCs and PLOCs, right? Well, instead of paying the bank that interest, you are paying yourself. So I hate even calling it a loan because it's like forced savings that goes right back to yourself. I know you mentioned before, Ryan, like infinite banking concept. This runs parallel to that. Like insurance policies is not something that the IRS will let you do inside retirement accounts, but this is that similar feature where you can borrow against and pay it back regardless of age or need. Everybody's pretty much a fan of leveraging in the group, right?
Yep.
Yeah. Okay. I figured as much. So you can leverage a 401k, meaning you can put a down payment down and get a loan. You could do the BRRRR strategy. And when you're doing it in a 401k, it has to be a non-recourse loan. That's the key with the IRS rules. That just means no personal guarantee, guys. It's an asset-based loan. You may have heard of the term DSCR loan. That works too, as long as there's no personal guarantee. I just gave you the golden nugget of being able to buy tax sheltered assets with other people's money and have all of the profits tax sheltered, just to hit that point home. And I'll show you a little bit lower here, like what that visually looks like. Fun stuff. And yes, you probably figured out I'm a little bit of a nerd. So if you're not looking at your screen, it's a flow chart of like what a husband and wife would look like. So a husband and wife solo 401k. And this tag team actually set up an LLC that was owned by the plan, and that's where they operated from. So those of you that have heard of a checkbook IRA or checkbook control, just know that is not a unicorn of a product. That is just deal structure. That's when you have an account or group of accounts that owns an LLC. LLC, get an EIN. EIN, you can go get that fancy thing called a checking account, right? And you just operate under that tax exempt entity. All right, so let's get to the fun stuff. So we're all friends. We all know size matters, right? In tax sheltered accounts. No, don't get dirty. We are talking tax sheltered accounts. Why am I talking about the size of accounts? Well, it's a fun acronym we are all familiar with. OPM. What am I referring to here, Ryan?
Other people's money.
Yes. In our world, we say OPI. You know what that one's for?
Other people's income?
Almost.
Investments.
It's not OPI, the nail polish either. It's other people's IRAs. Yeah, because you know what? There's over $37 trillion in retirement accounts out there, which is crazy. That is just, for most, that's just an unfathomable amount. But my point is, especially with where the lending industry is and interest rates right now, I mean, we've been riding high on the hog as far as very easy to get access to capital. This is where the creativity is going to win, I think, in the coming years. I'll let you chime in on that too. But you're going to have to start getting more creative with your acquisition strategies and your capital. Well, can other people's IRAs be your private money lenders? They sure can. Do retirement account holders love being a first, second lien position on a tangible asset where they have a consistent, predictable return versus yo-yoing in the stock market, buy, hold, hoping, and praying? Which sounds better to you? Let me think about that, right? And it's a no-brainer. But I find a lot of folks don't bring it up because they're afraid of misspeaking. That's what I do. That's where you say, hey, we've got the right butts in the right seats on our team. We'll introduce you to our team member. Here's why you want to work with us. Like, that's that conversation, right? Yeah, so it's very easy. Here's the bonus I was talking about earlier. So whether you were thinking of your own personal scenario, friends, family, etc., what I have up here is a list of accounts that you can self-direct, okay? And unless you're in this industry, some of these acronyms and numbers I'm going to say, you're going to be like, what the heck I've never heard of that. So traditional IRA, rollover IRA, Roth IRA, 401k, 403b. There's a lot of medical professionals and teachers. Teachers, depending on the state, they have what's called a PERS account. So OPERS, CalPERS, if you're in California, they vary by state. If you're no longer active, you can roll those over. 457s are usually our police officers, our firefighters, our county workers have 457s, pensions and deferred comps. You can move all of those. TSP, if you know what a TSP is or have one, thank you for your service. That is our government's version of the 401k. If you are no longer active, you can roll that bad boy over. And they finally got everything online, guys, so it's much easier than it used to be. Solo Ks, qualified annuities, SEP simples, DB plans, inherited IRAs is a big one. Health savings is one of my favorite double dippers because you get to get the deduction today and it grows tax-free. And I mean, we all have, just think of your own health scenario. We all take maintenance. And if you don't take maintenance right now, you will because we're all getting older. right? Fun fact. But education accounts too, so these are one of the, again, ninja tools that our team, when we sit down and we go over your own scenario, we uncover a lot of times, whether it's with you or someone that you're referring to be a private money lender, more capital that can be utilized than you initially think. So let me ask you this, Ryan, because this one on your screen is a good little split test. Is everyone raising private money or maybe going in that direction, or is this like a hot topic in the group?
If they're anything like me, it's something that they know the importance of, but maybe don't follow through with the actual gathering of funds.
Got it. Got it. And that's, you know what? I'm so glad you're being very humble and like just admitting that, because that is very true. That's common. I hear that a ton. It's like, I know I should, but I had this over here. I just used my HELOC. I will tell you guys right now, just start planting the seeds. And how do you plant the seeds? Just let people know that it's possible. That is it. Other than that, you're going to do the same thing that you're already doing. So what you see on your screen here is an easy post that you can do on the platform that you're choosing. And if you ask someone, how satisfied are you with your retirement account? What do you think their reaction is going to be?
It's good. I'm fine.
Not likely.
No.
You're going to get some ticked off folks.
I think
they're fueled by frustration, right? They're fueled from that experience, from opening that statement and having a tear fall down their face, or having to break it to their spouse. Honey, we lost 50K. Like that is a horrible feeling. So those are the folks that are going to comment. And those are the ones you want to get on the horn right away on the phone and have that conversation. Hey, did you know you can actually turn that into real estate? Here's how. I don't know all the nuts and bolts because I'm not the professional. I'll introduce you to my team, and all you talk about is why they need to work with you. But my point in planting those seeds now, it is more important than ever, because we're seeing interest rates rise. And to be able to, that means if you're still using conventional methods, your margins are getting skinnier, and that can be dangerous. And plus, we always want our margins fatter. So if you can control that just by simply getting the word out there, why not? Right?
Yeah, I think getting the Rolodex and getting the people that are, I like that for getting some prospects for sure.
Yeah. And it's a great one, just, and I hear this all the time, and I hear this from my own family as well. Like, the holidays are coming, what exactly do you do again? I always get that, especially from my academia family members. They're so smart. They have more degrees than I do. And I'm like, what exactly do you do again? Because it's just a different mindset. But it's planting those seeds. Well, here's what we do, and here's how we help folks just like you. And it starts the conversation without being pushy, right? Because it's a very win-win scenario when you're talking private money lending. Okay, so wholesales. I'm sure you have a bunch of folks that wholesale, or they wholesale by default, right? They're doing it intentionally or by accident. Okay, so before giving away, like I just did, because my trigger finger, you can wholesale in retirement accounts. Okay. How much money do you put down in a wholesale deal, Ryan?
$0 to a couple $100.
Yep. So put down a little couple $100 right out of your Roth IRA. Why am I saying Roth IRA?
Tax free.
It's free. Yeah, baby. All right. So it's just the name on the contract, guys. It's the same paperwork that you're used to. I'm not changing anything from using this account. You're just using a separate operating account. So the Roth IRA goes on the contract. You still make it assignable. And in this example, you got a $25K assignment fee. That's nice. So you're going to close at the title company like normal, and they're going to ask for the wiring instructions. You're going to send them the wiring instructions for your Roth, and that $25K is going to come back tax-free. Easy peasy. All right. It's literally just open an account, do a deal. And that's the other thing. Like, when I say open account, you got to put some money in it, right? I think a lot of folks just are of the notion like, man, I got to have like 6 figures in this account. Like, I can't start this yet. Like kids can do this stuff. It's $1,000 to start, like your minimum contribution, just so you have an idea. All right. So private money lending. So this is the note in the mortgage. It's almost the same for like a private placement. So if you ever see those opportunities to participate passively in somebody else's like commercial deal, this is typical deal structure. You're going to see a repeating pattern here. Open an account, have the name correct on the paperwork. Okay. Your assets recorded. Why do we want it recorded, Ryan?
Well, I could think of a few reasons, but probably to secure it. I mean, I
Yes.
would, yeah.
Why do banks require a lien is recorded? Because if you don't pay, what's the bank going to do?
Foreclose?
Yeah. Well, if your IRA is the bank, what's the IRA going to do?
Foreclose?
Yes,
Yeah.
exactly. And that is like your worst case scenario, guys. That's literally, so if you're painting, and I'm not to be negative, but you have to know your exit strategy and your worst case scenario when you're analyzing anything. As a private money lender, that's your worst case scenario. Oh, nuts. I'm going to end up with a property inside my retirement account.
Can I take you on a quick tangent with that?
Sure.
So in that scenario, let's say you didn't have the liquidity because most of your assets were deployed, or you were invested, and now you've got to deal with the foreclosure and legal fees and stuff that go with it. Because I would assume you would pay the legal fees out of the IRA as well and that kind of thing. But if you didn't have the liquidity there and you needed to pay for something like that, what would you do?
Sure. So first off is you always strive for a deed in lieu versus going through the foreclosure process. So before that's even, gotten to that level, you're always just going to say, hey, just sign over the deed. Let's call it square. If they will not just sign over the deed, you have three options. You can make a contribution, one. Two, you can transfer from another like account. Or three, you can take on a non-recourse loan. So a short-term interim loan to cover those fees inside of the account is what you would do. A lot of notes, and I mean, it depends. I've seen verbiage where it's pushed on the borrower, but you're already going against the borrower. So it just depends on how strong your attorney is.
Okay.
That makes sense. But yeah, that's the same. It's a good question because I'll get that question all the time when we talk about rental properties, right? What are your 4 guarantees in rental properties? Taxes. I'm going to tell you. It wasn't a gimmicky question. I'm going to tell you. Taxes, insurance, maintenance, and vacancy. Those are the only guarantees that exist in rental real estate. Okay. You have to plan for those things. Don't open up a $100K account and go buy that $100,000 property. That's not going to turn out well. Like you have to reverse engineer the numbers. And again, I know I'm talking about more deal analytics stuff, but you have to budget for those. And that's the same thing. Well, what if I get into a bind or the tenants trash the place and I've got to do more renovations than I have cash? Those are your ulterior options. Okay. So this is the same thing. Open account, fund account, lock up the contract, close remotely. And now you have property management, which you can manage your own properties. You just cannot compensate yourself. Okay. From the retirement account, because those rent checks are going to be made payable to who? The IRA. Mm-hmm. Yeah. Then it goes right back tax free. So when you log in your account here, guys, instead of seeing colorful charts and graphs and you're not sure what you're looking at, be honest with yourself. I'm a professional and I still don't really know what I'm looking at. It takes a minute, right? You got to dig into it. You're going to see 123 Main Street, and then you're going to see cash stacking up month after month after month after month. It reads more like your ledger does or your QuickBooks. Here's the 2 other ways for creative financing or creative structuring. Partnering. What if you have, that 100K property and you've got 60K in husband's and 60K in wife's account? Can you do the deal?
Yeah.
Sure. Partner them together. How do we partner them together? Staying compliant because they're disqualified from each other.
Is that rhetorical, or you want me to try?
Nah, you can try. Go ahead.
I was gonna say maybe an IRA LLC, or something like that.
Yep, you could do that. That's a possible deal structure. But what makes it compliant is that, like, if you and I partnered on a deal, we're going to split expenses 50-50. And I know you're a nice guy, but you're going to do the profits 50-50 too. You're not going to say, oh, I got the expenses this month, Amanda, right? It's whatever that percentage is. That's how everything's divvied. That's what makes it compliant, because there's no commingling of funds. It's just everything staying on their side is how that works. That can be done as well. Go back to that wholesale example. What if you said, well, that sounds great, Amanda, but I want more cash flow in my pocket today. How can I do that? Just partner on the titling. You could decide, hey, I want half of it to go to my LLC and half of it to go to my Roth. Easy peasy. All right. This is the fun one. Leveraging. So this should look really familiar, because it's the same thing for the outright. The only difference is this non-recourse loan that's going to be in the name of your 401k. All right. So we're going to close, rents go back. But what happens when you have a mortgage? You got to pay it. Where are we paying this loan from? Our pockets? It's going right from the plan back to the non-recourse lender. And that's a rinse and repeat motion until it's great.
Do we have a preferred non-recourse lenders or loans or that kind of thing? I haven't dug into it, but I was just like, where do you go to get someone that's willing to do it with non-recourse?
Sure. So I have a hot list. I keep a running list of institutional ones, but this could be like your Uncle Joe's retirement account can be your non-recourse lender as well. I will tell you guys, you're not strolling into like Wells Fargo and saying, ooh, can I have a non-recourse loan in my 401k? They're going to look at you like you're crazy. They don't do the traditional banks want you to sign on the dotted line, which means personal guarantee. They don't do those types, but institutions do. Okay. Absolutely. The larger capital companies do as well. All right. So for someone that's doing that structure, they may want an IRA LLC, like the checkbook control. That's what this looks like. And then you just operate from the checking account side. That's it. So it becomes mirroring. Okay. And this is what I always want to stress. It's just like mirroring what you're doing outside the retirement account, inside the retirement account. Why recreate the wheel? Keep it simple for yourself, right? Why not invest in what you know? Because your professionals tell you can't.
You ready? Can I give you one more tangent?
Sure.
So from this one, I have a multi-member IRA LLC, which my understanding with that is you can't do with the multi-member, you can't do continual or future contributions to it because of the way it's split up with multi-member kind of thing. Because my accounts, two of my accounts, one of my wife's account kind of thing. Mm-hmm. And I'm pretty fully invested in like syndications.
Okay.
And if you're keeping up with the things that are happening in like commercial real estate and apartments and that kind of thing right now, interest rates going crazy. I got an email this week about one of them wanting a capital call. And so now I'm like, okay. And, it's like, I think I have I have probably 75% of it that they're wanting in the checkbook, account. Right. Mm-hmm. But I'm like, well, shoot, how do I put the money in there that I could put in for the capital call to meet the need of the deal, but still like be compliant with the stuff that's going on there. And I'm trying to figure that out right now. And so I don't know if there is a way or if there's a bright idea in that ninja brain.
Yeah. So I'll touch on the contribution thing. And the reason why is because you're partnered with disqualified individuals. Mm-hmm. So when you guys are thinking about this, and I was going to touch on the family LLC here in a minute, but you have to think of it like a teeter-totter. If you put 6K in your wife's account, you got to put 6K over here. So the weight is always evenly distributed. So you're not changing the percentages of that. Okay. So you can do a little bit of contribution, but their IRAs, the IRS limits you per year, right? Mm-hmm. That's not going to usually get you to your dollar amount, so then you would be looking at leveraging would be your only other option.
The non-recourse.
Getting a non-recourse loan to get more money into the deal. But you've got to go back and look at the deal that you're in and see, just make sure the numbers work. Mm-hmm. that's a conversation to have also with the deal sponsor.
Right.
Well,
Yeah. It's but it's only, I'm seriously, I'm only like, I think for the percentage of the deal and all that stuff, I think they're wanting like 11 and I've got like 8 in that account. Right. So it's not like it's like an instrumental amount of money. It's more the logistics of like, okay, how do I do all that shell game to make it be okay and not get in trouble in the
yeah,
naughty list?
yeah. So I think it's just a matter of, taking that extra 3K, 4K that you need,
Mm-hmm.
whatever your percentages are on your operating agreement, divide that up for what goes into the account, and it will have to go at the custodial level and then down to the LLC level.
Okay. So into the custodian, then into the bank account to go to paper trail it. And okay.
Yep. All right. See, solving problems.
Yeah. Right.
I'm glad to hear it wasn't a larger amount.
Yeah. No. Yeah. Nothing. It was nothing. Yeah. But and I'm sure there's some of that going around, right? Like, but
Yeah,
and
I'm sure.
I can't necessarily fault the sponsor. We've had some great exits. We've had 2 exits, but I'm also in 2 others with him. But I mean, who really saw rates doing what they were doing, 3 years ago, right? Like when they got into the deal, and then now all of a sudden your commercial loan that you were getting 3%, now they're like, no, we want 9 or whatever, right?
Yeah.
Like, it's crazy.
Yeah. And that's exactly what I was hinting at earlier
Mm-hmm.
about, getting creative with your financing and lining up those ducks. Because, yeah, I mean, I do a lot of speaking and networking at events, and, there's a lot of arms that are adjusting soon, commercial and non,
Mm-hmm.
so it's a matter of, okay, let's get the spreadsheet out, figure out what capital is where and what we can switch out so that it's not either going to implode the deal,
Mm-hmm.
um, or run you negative, right? We want it still a cash positive scenario, regardless, where
Mm-hmm.
you're at. So that was actually a great segue with your family, because here's our families. so, but the whole point here, I know I'm sharing personal photos here, just so you can meet the team and know who the heck we are, because we're people and we do the same thing. Of why you're paying attention to this right now likely isn't just for your own self-serving purpose. You're doing it for something bigger than yourself, whether that's, your spouse, your family, the life that you want by design, what that means to you. Everybody's different, but a lot of times it goes back to, the who, right? So Keith Marsh and Edwin Kelly, those are the 2 folks right in the middle. They're the founders here at Specialized. Edwin was my first mentor. Keith and I literally went to Catholic school together. But that just shows you, like, good people work with good people, right? We've known each other, we know all of our families, and we all drink our own Kool-Aid, so we're doing the same thing as far as that why. And that's why we started the company, just so that you guys are aware. Like, a Specialized trust is a passive custodian. It is like a subscription model. It is not like a get rich quick thing. This is not for self-serving purposes. It's literally just spreading the word, one podcast, one conversation at a time, because if you plant enough of those seeds, then, you will find that, and I hate this as a buzzword, but like that financial freedom, I mean, money doesn't buy you happiness. I'm a firm believer in that. It does make it a bit easier, to be able to give and live that life that that God intended for you to live. I mean, that's just it. You can't drink from an empty cup. And we've all been there, especially if you've been on the entrepreneurial journey, and it's tough, so if we can make it easier, that's why we do what we do. Point blank. So here's what you are actually talking about, Ryan, is what do you do when you've got a bunch of family members, right? And especially when you have the gentleman I'm working with right now just had his 4th kid. And for those of you that have multiple kids, like number 2 doesn't have as much as number 1. Number 3 doesn't have as much as number 2 or 1. It's just like kind of the trickle effect, right? The
Mm-hmm.
parent problem. So I mean, even in this scenario right here, you would have to source 5 deals a year to make sure everybody's got an even playing field, no favoritism, right? So how can you make that simpler? Deal structure, a family LLC, just like you did. so that, when you're doing those deals, the whole family is benefiting, whether it's tax deferred, tax free, the whole kit and caboodle, right? These are the types of like stuff, just so you know, guys, you don't even hear from other custodians, administrators, because it's the applicable piece. The accounts themselves, even like the more accounts you do, and it can get super expensive, right? Like you hear about this at events, oh, legacy planning, generational wealth, the first 15 people to the back of the table, blah, 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 blah. We'll get this for the low entry price, like $20,000. I mean, we've all been to those types of
Click
events.
the link.
Yeah. First 5 in, right? I hate that stuff. It drives me nuts. And then it's like you're paying for all this stuff and you've got no results. Right? That drives me nuts. So we even have something we call a family plan that's like fixed pricing for life and unlimited household accounts. So we take that cost objection off of it, but you need to know what to do with it. So we pair in education with it as well, because we can't advise, but we can educate. Right? So this is like an example again of my nerdy self with like a family plan, what that can look like going forward. So the fun stuff, who's ticked off with this guy taking money out of your pocket? Yeah, I think everybody. So I want to give you guys a bonus. This is something called a conversion strategy. I'm like, what the heck is that, Amanda? So you heard me talk tax free. How do we get more money over to that tax-free bucket? Okay. So you're putting money in the tax deferred side to keep what you're making, but we wanted to get it over the tax-free side. So when you flip, who do you think you have to pay in the middle? Uncle Scam, right? How, as real estate investors, can you not pay Uncle Scam? It's a D word.
Depreciation.
Yeah, when you have rentals or private placements that give you cost segregation, it's using the tax code to your advantage. So this is just a best practice, guys. And again, I'm not, a CPA or tax strategist, etc. But this is a best practice, and it's very timely with where we're at in the year right now. It's fourth quarter. Email your CPA and say, what can I convert this year without paying a dime in taxes? And whatever number they give you, do it, because you just won the game. They're going to run your numbers, have your QuickBooks cleaned up, to do so. And they're going to figure out that number and do that incrementally year after year after year. That's how you switch that teeter-totter over to the tax-free side. That is key right there. That is a huge strategy. I mean, do you feel taxes are going up or down? Yep. Yeah. So, and that's just history, guys. I mean, we don't have crystal balls over here. So these are little best practices that will make a huge impact in the future. And it's literally an email, so it's not hard to do. All right. So Ryan, one of the things that I love to do for, especially in groups like this, is give you that, not the monetary piece, but the thing that's more valuable is time. All right. To figure out where you're at, whether this is, this makes sense today, we should have done it yesterday, or if it doesn't make sense in the future, how you find that out is just hopping on the phone, talking with myself or my team and figuring that out. So that is the one gift I'm going to give to everybody on here. And it'll be in the show notes too. The QR code goes right to my calendar. Let's talk. I'm happy to go over your own situation, or if you're raising private money, and go over all of that with you. That will be, did you say we're going to have that in the show notes? I'm going to have a free ebook for you guys too in there as well.
Awesome.
So I'm a giver.
I'm just taking a little screenshot of your QR code too to put in everything too.
Awesome.
Good. Yeah.
All right.
That. Boom.
Okay. So you guys understand like how easy it is to self-direct and like the timing of it. It's literally, you decide, you open an account, which I do that over the phone. Everything's done for you via DocuSign. Statement and ID is as laborious as it gets. 2 weeks or less, my team has the funds here. You are ready to do a deal. Literally, the only requirement we have is $1,000 stay in the account. That's it. And it's not expensive to do. Okay. Like I work with fee-based advisors all the time. They tack their fees on top of ours, and we still never get that fee objection. Just so you know, small business plans, there's a tax credit for this year. So it is not expensive to do a self-directed account either. And I feel like no one ever talks about the fee piece. We do an all-inclusive fee structure as far as transactions are included too. So you don't have to worry about that. Like, don't let that be, your false stopping point, because it's your money, it's your future. Do it your way. Okay. Hands down, take control. So I'll leave that up there. As far as the action equals results, that QR code, I believe, goes to my calendar, all my contact info. You've got my personal line. You can text, email. That's one of the things we pride ourselves on, is communication and response time, even when I'm a road warrior.
Wow. Where are you off to next?
I'm heading to Scottsdale.
Okay. For who?
Yeah. This is for Legacy Wealth.
Okay.
Which is the mastermind we're a part of. And then I get back a couple days later. I go to San Antonio. This is a chiropractic group that all invest in real estate that are doing that event. And then Magnify Your Wealth right after that. So it's like 3 weeks of boom, boom, boom.
Nice. And so when you go to these, like, I'm going to kick this off real quick because I took a screenshot. Oh, come on. Where'd it go? Let's go back. We're going to, there we go. So when you go to these, is it usually like you're there for 2 days, 3 days, and that kind of thing? Take the late flight, getting there, coming back, getting out the same day. Like what? I mean, the road warriors that it's just amazing. Like how your suitcase, like you probably are very efficient in your traveling, I would assume, and you're.
I try. I do.
Yeah.
I'm also, I'm 5'1", short and curvy, so suits suck. I'm always buy me in a dress. But yeah, you have to. The whole packing thing, like, that's fine. I mean, you gather enough points and all that jazz.
Are you a million miler?
No.
No.
Nor do I want to be.
Are you? So you're flying out of.
You can see them behind me.
Are you out of Ohio, or where are you out of? Okay.
Yeah.
So what's the main hub airline in Ohio? Like
it used to be United, but it's not a main hub for anybody. But we have good flights. I mean, Southwest, United, and depending on where I'm going, like if I go to the Southwest American, those are the typical ones. But yeah, I mean, it's usually like a 2-3 dayer. I'll speak usually on day 1, just because this is a more info intensive topic. And the goal is just to be able to sit down with the group and do one-on-ones. Some of them are masterminds, that we're a part of, so we're going as business owners and entrepreneurs with other business owners and entrepreneurs and seeing how we can help each other, the whole hot seat scenario, large keynote speakers and all that. But it's fun. You can probably tell I'm a very big people person. If I sat here in an office all day, like I would drain my soul, that the fun part is the connections that you get to do and the networking and the relationships that you build. And this because you do events too. You could be one conversation away, from that next deal or that thing that's just going to turn your whole family's outlook around. It's just get out there and, rub them elbows. You
gotta do it. I can handle it in bursts, and then after about a 2-hour networking thing or something like that, I'm like, I want a nap, like, what I mean, kind of thing. I can't, it works. I can do 2-3 hours is kind of I think my cap, for that, kind of thing. And then, yeah, it's like intentional extrovert for a moment, and then I need a nap. So
yeah, no, I hear you. It's just like, okay, I need like just some quiet time or I get you.
Awesome.
Definitely need the caffeine in the blood.
All right. Well, I'm gonna go ahead and thank you so much for hopping on, and I'm glad we were able to do it with sound this time. Yes. And and I'm gonna go ahead and end her here, but I hope that we were able to have some group members reach out to you and go through the retirement accounts, get you set up. I will have the QR code and the links there, so Well, we should be able to have some appointments pretty soon for you, and I think it'll be really good for our group, and maybe even generate some private lenders.
All right,
All
let's
right,
see.
awesome.
We're
Thank
going to have
you.
the private money challenge coming
Right?
soon
Serious.
live.
Really? Seriously. Well, if we were in a different group, we'd have an animal too. It'd have to be like some sort of like elephant or a tiger or something. I don't know. They have names for these things.